Thanks so much for your time, Michael.
Thanks, Heidi.
Let's perhaps just get some perspective about the market crash today. Perhaps perspective on how this fares or compares to previous market crashes that we've seen.
Yeah, so it was redder than your beautiful dress that you're wearing this evening.
Wrong colour.
It's blood on the streets. If you have a look at S&P 500, for example, in the last 70 years, it's only dropped 5% 32 times. Today, the S&P 500 is down 7%. JSE All-Share down today, down 6%. That's comparable to 2008 financial crisis sort of levels in terms of big drops. It's not something we're used to seeing on a daily basis, and it really tests your nerve.
Most definitely. Perhaps if we could zoom into the likes of Sasol. I mean, they've lost half of their share price just today, but we're also seeing the likes of MTN also taking a beating. Perhaps speak to us why we're seeing someone like MTN taking a beating, and what does this actually mean for ordinary South Africans? Have they lost anything? Perhaps put some perspective on that for us.
Yeah, so let's deal with MTN first. One of their biggest operations is in Nigeria. Nigeria is a big oil market. You know, Nigerian economy in general is going to be suffering, which is what investors are seeing. Coupled with that is just the general market sell-off that we've seen today. So MTN double whammy, which is why you're seeing it down 13 and not down the 6 that the market's been hit. Moving on to Sasol, their main price feeder, their main price determinant is oil. So when you see oil down 30%, which we saw this morning, their share price fell 50%. Part of the worry around Sasol is they've got a lot of debt on their books. You'll remember that at their ethane cracker in the US, that was over budget, cost billions, and they're now a very vulnerable stake. They said they're going to speak to shareholders tomorrow at 10 a.m. to give them an update on their balance sheet. But it's worth noting that over the weekend, Moody's actually downgraded Sasol's debt to junk status. So Sasol fairly vulnerable, coupled with a very big drop in oil price, means that that share price got absolutely hammered today. What does that mean for your man on the street? Well, depends. If you, like you and myself, we've got another 40 years before we need retirement, it doesn't really matter. If you're closer to retirement, obviously it's something to worry about. But effectively, unless you sell, you're not locking in these losses. More than likely, things will recover. Humanity likes to push boundaries, go forward, get stronger, get better. So long run will be okay. Short term, keep your head down.
It's definitely not looking good for Sasol. But let's speak about what this means for the South African consumer. Many are asking, does this mean that we'll see a petrol drop in the next month or so, given the fact that the oil price is doing so badly? But many are questioning the fact that the rand isn't doing so well, that this could perhaps impact petrol price not dropping at all. What do you have to say about that?
Yeah, so it's definitely the petrol price is the two components, oil and the rand. So oil's dropped 30% roughly. The rand's only weakened, I should say, by 4%. So on net, it's definitely cheaper in rands to buy oil today than it was on Friday. If this maintains for the rest of the month, more than likely we see a fuel price decrease. It's worth noting, though, that roughly half of the money that you pay per litre goes to the government in the form of taxes, and that doesn't change regardless of what happens to the fuel price. So you will see a drop in the fuel price, but not 30% like the oil price like we've seen, but unfortunate. Another impact for consumers is a lower oil price means lower inflation, which means that when our MPC meets next week, there's a very good chance that we get an interest rate cut, and that's very, very much felt in the pocket of the consumer. You know, paying less on your debt means you've got more money to spend on other things.
Hopefully. And then just lastly, Michael, perhaps speak to us about the rand not doing too well. It actually almost reached the $17 mark. Given the state of our economy, given where we're going at the moment, given the coronavirus is not getting better, we're seeing more infections, specifically in South Africa. Are we going to see things getting better anytime soon and not this massive bloodbath that we're seeing on the markets?
Yes, it's very much emerging market stories. It's not only the rand that's struggling at the moment. It's anything that's perceived as risky. It's anything emerging markets related. The Russian ruble was hit a lot harder than the rand today. And it's effectively investors saying we're running for cover, we're going to safe haven assets, selling anything rand related, moving into dollars, moving into Japanese yuan, moving into the euro, moving into the pound. Until things stabilize, you're probably going to see a bit more weakness. But in general, humans tend to overreact in the short run. So I wouldn't be surprised to see if we're a lot stronger next week this time.
Great. Thanks so much. We appreciate
Thanks,
your time.
Heidi.
That's Michael Traherne from Nedbank Asset Management.